This is Dan Dix here reporting for Press for Truth. And yes, ladies and gentlemen, you read that title correctly. Janet Yellen, who is currently the Secretary of the Treasury and who was just at the G7 summit in London, England yesterday, has recently stated that higher interest rates and, get this, inflation is going to be a plus for society moving forward. Guys, we're going to take a quick look at this. Yellen says higher interest rates would be a plus for the U.S. and the Fed. Treasury Secretary Janet Yellen said that President Joe Biden should push forward with his $4 trillion spending plans, even if they trigger inflation that persists into next year and higher interest rates. If we ended up with a slightly higher interest rate environment, it would actually be a plus for society's point of view and the Fed's point of view, Yellen said on Sunday in an interview with Bloomberg News during her return from the Group of 7 finance ministers meeting in London. The debate around inflation has intensified in recent months between those like Yellen, who argue that current prices increases are being driven by transitionary anomalies created by the pandemic, such as supply chain bottlenecks and a surge in spending as the economies reopen, and critics who say trillions in government aid could fuel a lasting spike in costs, guys. And we're also going to look at how this is going to affect gold. We see here gold slips as Yellen's inflation comments lift Treasury yields. Gold declines as comments by Treasury Secretary Janet Yellen on inflation raised expectations for fiscal spending, pushing Treasury yields higher. Bullion ticked lower after Yellen said Sunday that President Joe Biden should push forward with his $4 trillion spending plan, even if they trigger inflation that persists into next year, adding that a slightly higher interest rate environment would be a plus that helped boost Treasury rates, making non-interest bearing gold seem less attractive. And joining us on the line right now to help us make some sense of all of this is Max Porterfield. He's the CEO of CalinX Mines. callinex.ca is the website. Max, thank you so much for joining us here once again on Press for Truth. I want to get a follow-up with you on how things have been going with CalinX since the last time we've spoke. But before we get into that, maybe we could touch a little bit on these statements from the Secretary of the Treasury there, Janet Yellen, who says that inflation, according to her, is going to be a plus for society, potentially a good thing. Where do you sit on the inflation debate? Do you agree with Yellen, or do you think things are bad and potentially going to get worse?
Well, I hate to be negative on the topic here, but I think that she's talking her own book, like so many do when they're on the media train. And the reality is that I don't know that that's going to be good for anybody. You can ask anybody that's trying to go out there, remodel their home, build a home, go out and acquire just about anything. Even used cars seem to appreciate in value, and really they're just inflating. So I don't see how this is a positive for anyone. In terms of the spending, I do believe the spending is out of control. With that being said, I do believe that infrastructure spending, if there is going to be spending, is where it needs to be spent. Although I have to admit, when I review the infrastructure plans by the Biden administration, I wouldn't say all of it is going towards infrastructure, certainly. But when you do have infrastructure spending, that's obviously going to be a big driver for job creation, which I think is ultimately going to be good for society, and everyone gets to benefit from the infrastructure. With that being said, in the United States, the last true infrastructure build-out was during the 1950s. So infrastructure needs to be done and updated. And I don't see it as an anomaly coming out of the pandemic, so to speak. I see it much more in terms of policy that was made by politicians predating and even exacerbated during the pandemic.
Mm-hmm. Well, let's talk a little bit about the Biden administration and their never-ending budget deficits. Is this sustainable at all?
No, I think if you're at home and you want to run up a credit card bill, thinking never having to get paid, you think to yourself, that's not sustainable. And this is that on, obviously a huge magnitude. And again, I think it's just a politician trying to kick the can down the road because ultimately they don't want to have to deal with the hard decisions that need to be ultimately made. And the best way to do that is just keep going and trying to get yourself reelected with the easy way out, which is just print more money.
Yeah, well, right now they're printing it completely into oblivion. And I know this sounds crazy, but check this out. About 25% of all the currency that has ever been created happened in 2020. So how would you say does that relate to the commodities?
Well, it's going to be inflationary, and given that all commodities are predominantly priced in U.S. dollars, it's going to lead to higher commodity prices. That aside, though, the commodity space isn't a real supply side problem because discoveries haven't been made, particularly in the base metal space, due to lack of exploration really over the past decade during more of a depressed price environment for the base metals. So you really have a perfect storm for the metals. You're going to have a move based on inflationary environment. I think that we're all seeing, I mean, we can see it across all commodities in real assets. And then you're going to have it also from a supply side standpoint. We have really dramatic shifts in demand through infrastructure spending, as well as through this electrification of the world. A move away from the hydrocarbon as we have a better consciousness about how we're producing this electricity for ourselves or moving in about the world. And that's going to lead to much higher metal prices. You're already seeing it, record high prices in copper. I wouldn't doubt that, soon to follow would be zinc and then the precious metals as well, particularly silver. I mean, silver's having a great run given its big industrial use. I think that's going to be more and more prevalent. So, I think you want to be in the metal space for sure as a hedge at the very least.
Well, there are some, like Goldman Sachs, for example, who are calling this commodities a super cycle and naming a few major catalysts. Why do you believe the fundamentals support a commodities bull market?
Well, I mean, you have a big shift in demand. So if you're going to move around the world, transportation or really anything like that, you're going to need copper if you're not using oil and hydrocarbons. So because all of a sudden, oil is very, very bad. So there's a big shift away from that. And then when you look at that, a lot of these funds, more of these generalist investors investing in the mining space that are kind of new to the space, they're going to have really ESG mandates. So they're only going to be investing in areas where you have environmentally sustainable growth. So with that being said, a lot of these operations that might be low grade, big tonnage where you're processing a lot of materials that's energy intensive, that's not going to be so green. So when you think you're really moving away from the hydrocarbon, are you really? So again, you've got really limited supply, limited discoveries, because if you look at the global average, grades of copper, gold, any of these in terms of discoveries, they are going down. And from a discovery hole to production, you're looking 7 years on average for copper, for example. So there's going to be big lags while you're having, immediate shifts in demand with the EV and the infrastructure coming up as well.
Yeah, I agree, and it's been a huge year in general, I would say, for commodities. So let's talk a little bit about the company CalinX. As I understand it, shares are in huge momentum right now. I think you're up more than 700% in recent months. That's pretty incredible. Can you tell us a little bit about that?
Yeah, certainly. So we've been executing on our long-term mission, which is job creation through discovery. We were focused on expanding discoveries in 3 jurisdictions in Canada. Most notably in Manitoba, we've got a Rainbow deposit, which was discovered in August of last year. And so as we're expanding Rainbow, it's an exceptionally high-grade copper deposit, but also as polymetallic in nature. So it has gold, silver, and zinc as byproducts to the copper-dominant mineralization. And that's what's really led to the share price appreciation. So we've got a very robust drilling campaign in Manitoba to expand this exceptionally high-grade copper deposit. And it's ideally located that it's within 200 meters of a hydroelectric power line. So you're talking low-cost, clean power source, and again in close proximity to infrastructure, about 20 kilometers away from a town where the existing mines due to shut down next year. So we're getting the right metals at the right time and expand discoveries in Manitoba as well as in New Brunswick and in Newfoundland across the company. So we're very excited about everything going on for us.
And are you guys currently drilling, or are you looking to get this going in the 3rd and 4th quarter?
No, we're drilling right now. It's fully funded. So we've got a 30,000 meter drilling campaign. So that's a pretty extensive drilling campaign. So there's 2 rigs that have been drilling steady since February, and they're going to be drilling over the summertime and into the fall and winter as well with this fully funded campaign. Again, that's really focused on not just, delineating something that's there. Oftentimes you look at an exploration company, go back to an existing deposit and do some infill drilling. This is all drilling slated to expand a brand new discovery that's got really big potential for our shareholders, as well as the community that we're exploring within in Flin Flon, Manitoba.
Do you guys have any debt right now?
No, we carry no debt. And again, very tight capital structure, just 13.1 million shares on the entire company today.
Now, as I understand it, there was a major silver discovery recently, I believe a couple months ago. Can you tell us a little bit about that?
Yeah, so actually we had silver discoveries last year. They were 6.8 kilometers apart from each other. They were near surface, so it has potential to be amenable to an open pit operation, which would be lower cost mining methods. And this is in proximity to our PEA stage zinc lead asset called our Nash Creek deposit. And when I say PEA stage, that stands for preliminary economic assessment. That was done at a base case of $1.25 zinc. Today's zinc prices are done at $1.35 a pound. So we hit those silver discoveries last year, and then we announced in January soil sampling to cover 10-kilometer trending that encompass both those silver discoveries. They're very widely spaced. They're 6.8 kilometers apart. And with that, we've got anomalous silver near surface from the soil sampling campaign that correlate very nicely with each of those discovery holes. And so we're going to be expanding upon that with a drilling campaign later this year. That's slated for 3,000 meters, 200-meter holes, 15-hole campaign that's going to be testing to expand those discoveries along that 10-kilometer trend that we're following up on those soils. So we're very excited about that in New Brunswick.
Awesome. Now, I know you don't have a crystal ball or anything, but where do you see the prices of gold in particular heading in the near future? I mean, I often talk about on this channel how in times of great uncertainty, a lot of people will often protect their assets as a hedge against things like inflation and move them into more safer havens such as gold. And I do feel there is a great deal of uncertainty coming up in the third and fourth quarter with the Biden administration, with this global pandemic. There's so many things going on. As I said, I know you don't have a crystal ball or anything, but just giving the current environment and vibe of the world, where do you see this going in the near future?
I do see silver prices and gold prices appreciating very steadily here on out. I mean, each time they continue to more or less dilute the US dollar with printing more debt, that's only going to be beneficial and inflationary. And the only way to really get away from that is going to be buying the precious metals and or the cryptos. But I think there's a lot of issues around the cryptos that are becoming more and more prevalent. I think you've seen this back and forth movement from Musk on the topic, really centered around how clean is a crypto in terms of the energy intensity that goes into actually mining a digital currency, and then the long-term energy intensity that's used to upkeep that. Now, some are going to be less than others. I understand all that, but you don't have that with gold. I mean, you have the energy intensity sitting there to maybe keep the light on when you want to go into a vault to check it out, or to keep the security around it from a physical standpoint. But you can't get away with what's occurred in human nature for thousands of years, and that's been the affinity for gold. So I don't see that changing just because of an advent of something new with the cryptos. And I do think that the cryptos are going to be under more and more attack, like you've seen out of China recently and some of the news that they announced there on how they're going to be handling cryptos and competing cryptocurrencies by more traditional governments being issued on their own rights. So we'll see how that all plays out, but I do like the precious metal space for those reasons.
Me too. I'm bullish on the precious metal space right now. I am involved in the cryptocurrencies as well, but I'm more favorable of tangible assets, things that can't be knocked out with the flip of a switch. So I think gold is a pretty safe bet. It has been for thousands of years, and I think it will continue to be moving forward.
Right.
Yeah.
Yeah, no, I was just going to add to that. Of great concern to me, though, is you have the Bitcoin. I understand the concept of Bitcoin, very limited supply to get away from fiat currency where there's unlimited supply. Mm-hmm. But when you see the equity valuation, the capitalization of other cryptos like the Dogecoin based upon a joke, where there's unlimited supply with the notion that this is going to be long-term store value, that's where I start thinking there's a bit of a bubble in a lot of these spaces like the cryptos.
Yes, I agree. Deflationary crypto is absolutely crucial. I also think decentralized deflationary crypto is absolutely crucial in order to succeed moving forward. Otherwise, the powers that ought not to be will just co-opt it, coerce it, take it over, and implement their own centralized digital currency for total control. But it's still interesting to pay close attention to this space. So yeah, thanks for bringing that up. Where can people go right now where's the best place to go if they want to get involved with you guys or learn more from you?
Well, you can visit us on our website at callinex.ca. There you'll have information to an investor presentation, our news releases, and our contact information. Most importantly, we always like to speak to investors out there that are interested in the space and what we're up to.
Perfect. All right, awesome. Well, I want to strongly encourage everybody to check out the links. We will have all the links to that located in the description below, guys. These guys do their due diligence, and you should too. But a good way to do that is check out the links right now located in the description below. Once again, Max Porterfield, thanks so much for breaking this all down for us today.
Thanks so much for having me.
We all want truth. will set you free, free, free.